Hello, this is Juliana too, and I'm going to cover documentary transfer tax in this session. Now, many states have a special tax on the sale of real estate. This is not about the income tax that you have to pay on gains that you make. It is more of a sales tax, except it's not on products sold, but on property. Now, why is this topic important? I had a transaction that almost canceled close to the end because of a $40,000 transfer tax that the buyer did not account for in figuring out his funds needed to close. And as you will see, it can be a huge part of the closing costs in a transaction, one that you might not have even thought of. But first, the disclaimer. The information contained in this video is only intended to provide a guide in the various California-only transactions to which the information is applicable. No representation is made as to the legal validity of the information or the adequacy of it in any specific transaction. The information contained should only be used after consultation with your financial counsel. So, what is the documentary transfer tax? When you go to the stores to buy goods and products, we all know that we have to pay a percentage for sales tax, be it a box of laundry detergent or the washing machine that uses it. Well, consider these products as small value items. When you buy or sell real property, that's a big value item. You will also have to pay a sales tax. And in this case, in California, we call it a documentary transfer tax or simply transfer tax. When a property changes hands, the ownership transfer document has to be recorded in the county recorder's office where the property is located. The county recorder, under the Revenue and Taxation Code, collects a transfer fee on behalf of the State Board of Equalization. This transfer fee is the documentary transfer tax. This fee can be quite hefty, as you will see, and it is part of the revenue that is generated for the individual counties and cities. So, how much is the transfer tax? The Revenue and Taxation Code has set this tax at 55 cents per $500, or as we call it, $1.10 per thousand of the value assigned to the property that's being transferred. Now, if the property that is being transferred without the payoff of all the existing loans, meaning that the buyer is going to take over those loans, then the calculation will be based on the value of the property minus those loans that are not going to be paid off. The transfer tax will be based on the equity that is going to be transferred. Now, here are some examples. For instance, let's say there's a sales price of $500,000. So the tax is going to be based on $1.10 per thousand, and it is going to be $1.10 times 500, and the transfer tax is going to be $550. Let's say that the sales price is $750,000, and the buyer is going to take over the loan, assume the existing loan for $500,000. That means that the equity that is going to be transferred is only $250,000, which is $750 minus $500,000. Therefore, your transfer tax is going to be based on that $250,000, and it's going to be $275. Now, who pays the documentary transfer tax? The custom of who pays is actually different in different parts of the state. Normally, in Southern California, the seller pays. In Northern California, the buyer pays. And in Central California, it can be a combination of either one or the other. The payment can also be negotiated in the contract between the buyers and the sellers. You know, the county recorder does not care who pays as long as it gets paid. When is the transfer tax paid? The tax is paid when the ownership transfer documents, which is usually the grant deed or the quitclaim deed, is submitted to the county recorder's office for recording. It is paid together with the recording fees. Now, if this is an escrow transaction, then the amount of the tax is figured out by your escrow agent. It's typed on the document, and then it's going to be collected with all the other closing costs from the buyer or the seller. And it will show on the party's closing costs. The county recorder will collect the tax, and then they will send it to the state through the State Board of Equalization. Now, let me backtrack a little bit and talk about these ownership transfer documents. What is that? Well, any document that transfers ownership, and most likely it is either a grant deed or a quitclaim deed, will need to show the transfer tax on it. So here we have a copy of the top part of a grant deed. If you look at the arrows, you will see that we have to type on it the transfer tax for the county at $550, and there's also one for the city at $2,250. So, what is the city transfer tax? In addition to the county's transfer tax, there are certain cities that need to generate more income. So they charge their own transfer fees in addition to the county's. And they also ask the county recorder to collect it for them. So here are some examples of some cities. City of Los Angeles, $4.50 per thousand of the sales price. City of San Francisco has a tiered calculation. For anything up to $5 million, they have to pay $5 per thousand. And anything between $5 million and $10 million, it's going to be $20 per thousand. And anything over $10 million, you're going to have to add $25 per thousand to the closing costs. Ouch. City of Berkeley also has a tiered program, $15 per thousand up to $1,500,000 and $25 per thousand for anything over $1,500,000. This is a lot of money, which means that selling and buying real estate in those cities can be quite costly. About 30 cities have them, and most of them are in Northern California. It's pretty painful, isn't it? So let's look at some examples. $550,000, the transfer tax is going to be $550 for the county, right? $1.10 per thousand of the 500,000. But if this is in the city of Los Angeles, you're going to add another $2,250 to this because Los Angeles charges $4.50 per thousand just for those properties in the city of Los Angeles. Let's say that you have a sale price of $1,750,000 in Berkeley. That is a pretty common sales price. So your county transfer tax is going to be $1,925. That's $1.10 per thousand, and it's $1,750,000 sales price. Plus, the city of Berkeley has a $25 per thousand in addition to the county, and we are talking about an additional $43,750 that has to be added on if you are buying a property in that city. Yes, that is very painful. But there are some exemptions to the rule. It's not every grant deed and every quitclaim deed that is going to get charged. So thank goodness there are exemptions. These exemptions have to be typed on the deed, and it also has to be chosen on the preliminary change of ownership form that accompanies the deed. So here are some of the common ones. The R&T, by the way, number behind these exemptions just denote the section of the Revenue and Taxation Code that allows for this exemption. One of the most common ones is that this is a bona fide gift and the grantor received nothing in return, meaning that I did not sell this property, I'm just giving it away. This happens quite a bit between parents and children, grandparents and children, and so forth. Another one would be this conveyance establishes the sole and separate property of a spouse. And now this happens when the spouse is going to quit claim his interest to his other spouse. And therefore, there's not an actual sale. So you would use this exemption. How about this conveyance confirms a community property interest, which was purchased with community property funds. So let's say that a married person bought this property and now is adding his spouse or her spouse on it. This is not a true sale. They're just adding a spouse because they use community funds to buy the property. So they can do that with that exemption. This conveyance transfers an interest into or out of a living trust. This is very popular too, particularly when trusts are very, very popular at this time for estate planning. This conveyance is in dissolution of marriage by one spouse to the other. Obviously, this does not need any kind of an explanation. When you're getting divorced and one spouse is getting the property, you can do the grant deed or quitclaim deed and you can put this exemption on it. This conveyance confirms a change of name and the grantor and grantee are the same party. This happens when one of the parties gets married and they're changing their name from their maiden name to their married name. This conveyance changes the manner in which title is held. Grantor and grantee remain the same and continue to hold the same proportionate interest. When a person or persons decide to transfer their property into, for instance, their own LLC, then they can use this clause because they are the same people as in the LLC and they hold the same proportionate interest. So it can be claimed as an exemption. Now, these are not all the exemptions. There are some other ones that are not as commonly used. Please refer to my link in my video description below, and you can go on and see what other ones you might find. I would think this is a good time for me to mention what is the preliminary change of ownership form that I was just talking about. So the tax assessor's office uses this preliminary change of ownership report, or PCOR, to collect 4 types of basic data when the ownership is transferred. So you record the grant deed, you have a preliminary change of ownership form attached to it so that the assessor's office can find out these 4 basic data. First of all, who are the transferring parties? What is the value of the property being transferred? Is there a homeowner's exemption that might qualify in this instance? And also, finally, is there an exemption from tax reassessment from this ownership? And if so, why would there be an exemption for tax reassessment? So you should probably look at my separate video that describes the preliminary change of ownership form in the future. What do you watch out for regarding the documentary transfer tax? Every ownership transfer must pay transfer tax unless an exemption can be claimed. That's number 1. Number 2, Exemptions that are claimed will be reviewed by the tax assessor's office. And they may even ask you for background information if they feel that this is pretty iffy. The payment of transfer tax can be negotiated between parties. That means that when you go into a transaction, you can actually negotiate who's going to pay the transfer tax. This is something that would probably sit very well in those cities that have their own large transfer tax. And of course, be very sure you know exactly where this property is located so that you can either bypass the payment of city transfer tax or you can figure it into your closing costs. So for instance, is this property in the city of Los Angeles? Or perhaps it's in the county of Los Angeles, which does not have the transfer tax. So these are things that you would need to know when you open the escrow. And if you are taking over the loans that the seller has on the property, then the calculation is on the value of the property being sold minus the loans, which is how we call it, less liens remaining at the transfer. Well, as always, I want to show you my t-shirt for the day. And as you can see, today I'm wearing another superhero t-shirt. It's for the Flash, part of the DC Comics. The Flash's superpower is his ability to speed through life while decimating those bad guys. A great power for a fun character. Thank you all for watching. This is Juliana 2. I hope that this video provided you with some background on a common but relatively unknown tax. Please like and subscribe, and also check out the links that I have provided in the description below for this same topic in other articles. Thank you, and I shall see you on my next video.